Hi traders, welcome to Monetize. It's time for the new weekly preview video. The text version is already uploaded on the website. You can check it on my website www.monetize.in. In this video, I'm going to explain the key technical levels for the four instruments DXY, Gold, WTI, and Nifty. For any trader, the key levels are very important because if you're selling from the right level or buying from the right level, the results are awesome. Jan is almost done, just a day to go. Hopefully, you had a good trading month and looking for the best to come in the days ahead. Out of the four instruments explained in this video, I find two technical setups really very promising. So do watch it till the end. Let's start with the technical analysis. To begin with, we are on the DXY weekly chart. So it's already on a bullish run, and what's happening right now is it started from this area, this bottom. This is the bottom from which the bullish run started, from where the bullish run started. And we are expecting something like this. First wave, second, third, fourth may come down till here or here. This is the count number one. The alternative scenario, if it is already in the 5-leg structure, then it may be something like this. Number one, two, this we can count as number three. Number four is already done here, and this is going to be the fifth wave somewhere here. And I'm expecting this wave to end with a bearish divergence, higher high on the charts, but it will be making a lower high on MACD and RSI. So I'm expecting DXY to push a bit higher towards 98, 99 area. Now this area, 98 to 99, why it's really important? Number one, if we join the falling trend line starting from this area, we have a falling trend line resistance here. Number two, if you check on your left, this area, it acted as support and resistance multiple times in the previous months and weeks. So this is the reason it's a very strong resistance zone. So what we can expect, the dollar bulls to take a breather when they reach around this area. Alternative scenarios, it may give a false break and then come back lower. So it may clean this high as well. And less probable scenario, it may just break above the falling trend line, make a support, but this is going to be a really like very difficult scenario because it's been quite a bull run for DXY, and reaching at these levels 98 to 99, we are expecting a short break for the bull run. So if we want to check it on the lower time frame, daily, so the cycle which I was explaining on weekly, it will be more prominent on the daily chart. The first wave, the second, the third, fourth is done. Now it is going to complete the last and fifth wave. So here you can see it's building some sort of bearish divergence on MACD. It's not yet there, but it's going to be completed very soon. As of now, we do not have any signs against, neither on weekly nor on daily. Let's check on the 4-hour time frame. On the 4-hour time frame, we still have the higher high formation on MACD lines and MACD histogram as well. We are just witnessing a bit of slowdown here, so it may be a consolidation or a pullback and then continuation higher. So just on the 4-hour, we can see a small break in the bull run, maybe a small pause, a little bit of consolidation, and then a continuation higher. Okay, this is for the DXY. Let's switch on to the next one, which is gold. This is the weekly chart of XAU USD, and we have two falling trend lines. This is the top, and if I join this one, then I get the trend line number 1. Alternatively, if I join these tops and draw it like this, then I get the trend line number 2. And as of now, gold is honoring the resistance created by the higher and the lower trend lines, the resistance and the support as well. It was resistance here, and now it turned lower from this resistance area. Okay, let's go back to daily time frame. On the daily, the move lower is very prominent, exactly from the falling trend line resistance, the higher one, and it has reached to the rising trend line. Now this rising trend line is coming from this area. So if we join the lows, like this, so we get a rising trend line. So it found support here, here. If you want me to mark here, here, and now maybe here. And if we dig deeper on the 4-hour time frame, you will notice the support is formed on this rising trend line. So this is a good formation. Further, if we dig down to the hourly time frame, so what we got on hourly time frame, a bullish divergence between the L1 and L2, the latest low and the second last low. So what we can expect now, we can expect a pullback based on the fib retracement. So I'll mark the fib retracement from the recent swing high to swing low. The first one is 23, 38, 50 and 61. So I'm expecting a pullback towards this area. So anything between 817, 8 to 825. I've mentioned in the text version, I'm expecting it to reach around 1815. So let's see how it plays out in the coming days. And if you check it on the daily time frame, what I've mentioned, what happened to my system, something wrong with the internet. Yeah, sorry, the connection was poor. Now it's better. Okay, and if you see what I mentioned in my text version, it may happen that gold forms a support at the current level, which is around 1780, and it may keep on moving above this rising trend line and finally breaks through the falling trend line resistance. Scenario number one. The scenario number two, it may not this one. Okay, the scenario number two is, yeah, oops, 1 second. Yes. The scenario number two is like this. It may come down a bit lower towards this region, which is 1760, and then bounces upwards. And the least probable scenario, it breaks all the support, this rising trend line and this horizontal support at 1760, and finally breaks lower and pushes further deeper towards 1670 area. Very less likely. Yeah. Okay. Now let's move on. Let me clear all the drawings. Okay. Now let's move on to the third one, which is crude oil, WTI. WTI, we are on the daily time frame, and if you check, it has already lost some momentum. The last two daily candles, it's a loss of momentum because both the candles, they are indecisive. A doji candle at the top of the bull run. Okay, so whenever a doji candle forms at the top of the bull run, the most likely the scenario is we are going to get a trend change, at least for the short term. So what we'll be looking at, I'll mark this trend line number one, trend line number two, and if we get a break below these trend lines, then it's going to be a good scenario to short this, at least till this area, which is 78 to 80 region. But condition is it should break below the rising trend lines. If you check it on the 4 hour, this is a trend line, and if we join these highs, so what has happened, the bulls have tried to break above this area, but they failed and finally closed below. Apart from that, we can clearly see a bearish divergence on the MACD. So this is the reason I'm waiting for the trend line to be broken. Something like this, not so deep, towards this area, 80. So out of the four setups, this is the number one setup which I'm looking at. But the only condition is it should break below the rising trend line. And the point of invalidation would be if it breaks above this region and makes a valid support. this will be the point of invalidation. Otherwise, as per the bearish divergence scenario, I'm looking at the setup for the sell side. And after this, the last one to go is Nifty. Okay, Nifty again, I have two scenarios. The number one scenario, let's start with the weekly time frame. Because on the weekly time frame, I still see MACD histograms moving downwards. They still have bearish momentum. So I have a bearish bias. And what happens on the daily time frame? On the daily time frame, we see a loss of momentum in the bearish party. Yeah, a clear loss of momentum because the red histogram, the bearish histogram is now shrinking upside, shrinking to the upside. So the bearish pressure is decreasing, number one. Number two, we had a false break on the rising trend line, which is a bullish scenario. Just look at this candle. A break below the rising trend line. Finally, it made a pin bar and closed above it. After this candle, none of the candles were able to break below this area. So holding above this area, which is, if you talk it on the levels, this is 16,700 to 16,871. So holding above 17,000, 16,800 is a good sign for the bulls. But the problem is, I see a big resistance around this area, the previous support and resistance point, this one. So this is one probability that it may rise towards 17,500 to 17,600, completes the right shoulder. It's making a formation of head and shoulders. This is the head, the left shoulder, and it completes the right shoulder and then comes back. Or alternatively, it may form a good support here, which is already done, and pushes higher with the full momentum, retest of 17,500 as support, and continuation higher. So this is again a very good setup from the bearish point of view. So I'll be watching around this area 17,500. I won't be taking any trades until 17,500. Either scenario number one, I'll be looking for selling around this area with confirmation on the lower time frame, or alternatively, if it breaks above 17,500 to 600, I will again wait for the retest, wait for the lower time frame confirmation. So it may take around 3-4 days to complete the setup, but after that it will be a very good setup to trade for. Hope you all liked today's video. And if you want to know the technical analysis of any particular stock or instrument, please do mention it in the comment section. If you want to know the details about my trading courses, you can check it on my website www.monetize.in. If you are new to my channel, please do subscribe so that you'll be notified for all the upcoming videos.